Traders are on edge as stocks haven't been able to make new highs, confusing those who have entered into this game in the past decade. A downward trend is here globally, and with the possibility of weakness in the US, that is extremely bearish for emerging markets and developed nations alike. With central bank assets slowly evaporating, what direction do you think stocks will go? You came here for the truth, so let me unveil that for you. Today we're going to look at the stock market. We're going to look at the central banks. I want to talk about other factors after this. Let's begin by taking a look at this chart. There are 4 lines, 4 indicators on here, and I want to look at the most important first. And you can see this red line representing the direction of central bank assets. Their balance sheets have been diminishing throughout 2018. It's taking a long time. They're going way too slow as far as I'm concerned. But you have the Federal Reserve leading the charge, and they started to taper off back now a year ago, and this has taken way too long. But here we are. Okay, so we actually have this minuscule and minute decrease in the central bank total assets. Already, I believe that it has had a major impact on the world, and it is only the tip of the iceberg. We are looking at emerging markets with the red line here. We can see the global systemically important banks right here. And then we have the green line, which is the Nasdaq composite. And that here, up until just recently, shows complete resilience to everything else that's going on in the world. But this has sort of converged in with these other factors. It could easily turn around. We'll see, and I will show you what the stock market is doing right now. But essentially what we have are issues that are occurring today that are stemming from the actions of central banks. That is really what's happening. It's not a random set of events. It's not here to basically suggest that this is all coming out of left field. No, this is happening because central banks are drying up liquidity. I want to make that very clear. That is the reason why. Now, let's cover these factors now. We're looking at the Nasdaq down just a little bit. I mean, it's down 19 points at this point in the day. It's been up and down. But I believe that usually what occurs is that in the afternoon, the plunge protection team comes in and they boost up the market. So we'll see if they do so today, whether they will in this case or not. Usually by the end of the week is when they like to clean up the mess, just as they did last week. For those who aren't aware, that this is being recorded on Monday's trading session in the middle of the day. So we'll see what happens by the end of the day, but that's how it is today. And FANG stocks are really leading the charge for all the markets around the world. They're very focused on their performance. And that leads me into this here. The Dow Jones Industrial Average seesawed along the flat line. They're trying to get back some of the points that they lost from last week. Netflix fell more than 2.5%. Amazon, Apple, and Alphabet all traded lower here as of this article. But I just wanted to show you the fact that these stocks are simply finally following into the global trend. That's all. There's a global downward trend. Look at the German stock market. Look at Italy. Look at the global systemically important banks. Look at all these other markets out there that have been in a bear market or have done very poorly throughout 2018. When I hear this nonsense that quote unquote the stock market is rising, I have to say, please take off your blinders, take off your sunglasses, open your eyes, wake up from your dream, and start to look at reality. This is the VIX, one of the worst indicators of reality. And I just like to cover it here at this time because we should see a much higher number. I mean, right now today, it's just under 21. falling by 2%. The VIX falling at a time like this makes absolutely no sense. With everything that's going on with China and the US, with Turkey, Saudi, and other countries that are all involved one way or another in a situation that should look very bad on the VIX index, and yet it's falling by 2%. This is a nonsensical indicator. It's a delay. Why in the world would this ever be a delay? It's funny, the stock market falls, all right, the VIX will rise. As it corresponds. It shouldn't work like that. There should be risks present. There should be fragility, and the VIX should represent it. That doesn't happen at all. Not at all. One stock market that has shown its weakness this year for sure is China's stock market, the Shanghai Composite. I mean, you want an example of a stock market that's been beaten up? This is the one. I've been covering this throughout 2018, showing you how it just continues to fall further and further and further. 25.68 today. As of the close, it dropped about 1.5%. And when you look at it from the peak in 2018 up until today, it is minus 28%. Now that right there shows us true weakness and a market that is officially a bear market, and it's officially looking terrible in relation to other markets as well as just seeing where we have come from since the financial crisis. You know, when I hear these, again, nonsense about the stock market rising, I have to ask you, where are you looking? You looking at FANG stocks? Is that what we're talking about still? All right. Now, switching gears very quickly, food services and drinking places, retail spending month over month, that has declined significantly right here in 2018. It hasn't been this bad since what looks like probably the end of 2016, beginning of 2017. So that shows us that the spending, at least month over month here, is looking very weak. And over the past few months, that number has actually been declining. I want to know if this is a bigger trend. Of course, I will show you an update on that. That's all I wanted to mention. Let's move on. Taking a look at something to switch gears yet again. When you can see this website here, you'll get a perspective on the world. It's interesting, to say the least. This is from HSBC's website, Expat Explorer. Okay, so you go through this website and it shows you their report that they provide. If you click on the global report, you get this, and you can kind of scroll through it and get some information here. It just gives you some details, looks around why Singapore is the best for expats, and they go through all the details. They break it all down. Canada happened to rank number 4. If I'm not mistaken, the US was number 23. There's many factors. It's not just about the money, but that is something obviously that I want to talk about right here. So Bloomberg basically broke it down into a couple charts in this article. And they said this: these are the best countries to live and work in, and to boost your salary. Moving abroad boosts the average worker's income by $21,000, with the best paid staff found in Switzerland, the US, and Hong Kong. The conclusion of the survey showing that 45% of expats said that their existing job paid more internationally, and 28% changed locations for a promotion. All right, so look at the difference here when you could see, just in terms of the money, Switzerland tops the list of destinations for the biggest pay packets. All right, average annual expat salary over $200 in Switzerland. The US is $185. You go down to Singapore, $162, and you could see that this country here, Singapore, at $162,000. It's not just about the salary, according to this Expat Explorer. There are several factors. If you want to check them out for yourself, there will be a link in the description, or you could just go to a search engine, type in Expat Explorer HSBC, and you'll find it. The best places to live and work 2018. Singapore tops the list based on economics, experience, and family life. So Canada right there, number 4. Germany, number 3. Switzerland's actually number 8. Okay, so they're talking about how expensive it is to live there and other things that are truly very important. New Zealand comes in at number 2. Okay, so that's all I wanted to show you for this. The reason I bring this up is because where you live really affects so many things, your experience. If I say in the US, real estate is unbelievably expensive, am I really being truthful to you? No, that's a generalization. Okay, so if I say I'm in San Francisco and real estate is very expensive, that might be very truthful. I could say, I'm in the middle of nowhere in the United States, real estate is very expensive. That would be a lie, right? Because there are all these different areas, but then I could say, look at my salary. Well, I'm only getting 30% of the salary I was getting in San Francisco. There are so many things to look at, and this goes not just within a country itself, but expands globally. So always remember that, and that's the reason I mentioned this, okay? If you found this video informative, please give me a thumbs up, and give me a thumbs up. It helps to support this channel, so I do appreciate that very much. And last but not least, if you want the financial education that was not taught to you in school, check these books out. They give you everything you need to know. Link is in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.